Good morning, everybody. This is TJ again. I just finished recording a very successful crude oil session this morning. Today I'm going to trade soybean futures, but I'm going to use one of my other broker accounts. I'm actually going to trade on the Thinkorswim platform today. I know we have a lot of traders that are interested in trading on Thinkorswim. I like to use my TradeStation charts and place trades on the Thinkorswim ladder. I have a bracketed order, a template for soybeans that emulates the exact setups here with range bars. You know you're always going to have the same setup, and so when I place my trade, it's always going to be the correct trade. And all I have to do is manage it properly. I have it set up with two targets. I will delete one of them so I can trail. I just like to do it that way. You'll see I'm looking for my first setup here on soybeans. Now, looking like a setup against the yellow line here is not. That's typically not going to happen. Now, when I trade with the Thinkorswim price ladder, I use a monitor that's portrait oriented. It's long, it's up and down, so that I could stretch this ladder out. Makes it a lot easier to trade, but it's not possible to record a video on that monitor. Doesn't turn out. So I pulled it over to the landscape horizontal monitor just for the sake of this video, but because it's soybeans, these trades fit anyway. So if I'm trading something like heating oil and I have much longer targets, or crude oil even, then I will use the portrait oriented monitor. And the E-mini's dropping off, the Dow E-mini. Getting into a short trade really quick and just hitting its full target. Alright, so soybeans, $12.95 and a quarter. It's a little slow grabbing that. It'll come back down if this is going to be good. And that's targeting $12.93 and a quarter. And my stop is at $12.97 and a quarter. So I got my trade placed. Now it's just a matter of doing its thing. I want to remember to set my template again. Now this technically did trigger in, right? But because I took my time in placing the order, I'm still not into that trade. It is on top of a key level, $12.95, but with soybeans and quarter point ticks, and I don't make adjustments. I don't adjust around key levels. And getting filled, two positions. It's been a great week in soybeans. It's been a market that has just done nothing but win all week long. Trying to finish this weekend strong. You can see it's come off pretty far here on a 5-minute chart. I don't really look at this chart much. Just look at it just out of interest. I'm trading pure trend jumper. I don't let anything else influence my decisions. And now it's just about being patient. So while we're waiting for soybeans to do its thing, let me show you what happened on the Dow E-mini. Dow E-mini, we started 8:32, and you can see this is at 8:31 and 33 seconds. This bar closes right at 8:32 down in here, and it looks like this trade is probably just missed. Really nice trade, but sticking to the rules of the trade plan, you just have to assume that whoever's following that trade plan missed that trade because it just went a little too far too fast. So whoever's trading the Dow E-mini today would just wait for the next setup. We don't chase trades. We do have a start time. It does give us really great results. And so, you just have to be patient. Nothing's perfect. This one just barely missed. Could you have put an order in 1 or 2 ticks below? Yeah, if you would have known to do that. Could you get in 1 tick or 2 ticks below? You could. It's just, how do you know to do that? You got your order sitting up there. You're waiting for it to pull back and touch it, and then it runs away from you. To me, I'm going to wait for it to come back and touch my order. I'm not going to chase it. I have to consider that a missed trade. That's the way it goes. So you can see soybeans over here. Now I can quickly click over to my order entry if I need it. It's right there. Nothing for me to do but let it play out. Looking at a few other markets over here on the right. But crude oil, we're already done. We already hit our two winners on crude oil. Heating oil, you can see heating oil ended up, let's see, it got a loss right here, but then it hit a winner, and it's still going now. And so all this trade has to do is move down a bit more with the trailer, and heating oil will end positive. It'll be like a 30th winning session out of 31 sessions. It's only had one losing session in the last, boy, I lost count, I don't know, 29, 30, 31 sessions. It's been a remarkable trade plan. So I'm hoping that soybeans has a little more downside. You can see it hung up on that yellow line and hung up on the 12.95 level. We'll see if it can push lower. E-minis in free fall. They gapped up, right? And then they quickly went down and filled their gap, or they're in the process of filling. The YM is actually leading the charge. If you were to look at, for example, the Russell or the S&P or the NQ, it's the YM that's crashing down, already filling the gap and moving below significant levels, whereas the other E-minis haven't even filled their gaps yet. Let's pull up the Russell. So the Russell got short right here. That would have been a great one to be in, yeah. Starts at 932 also, and that one got short. Now, when I say 832 on the YM, that's because it's traded out of Chicago, but, you know, it's the same time, 932 New York, 832 Chicago. Always put your chart to exchange time. At least that's what I do. Helps keep it straight in my mind, dealing with clients all over the world in different time zones, so it avoids a lot of confusion just to keep everything on exchange time. So soybeans here, 8:30 Chicago time, right? It all started at the same time, basically, except for crude. That started at 8:50 Eastern Standard Time. Heating oil was at 9 a.m. Eastern Standard Time. So the Russell hit its money management level, that first target. So anyone in that trade would move their stop from here down to here and lock in a tick. And soybeans, look, breaking through. Let's pull that up. Soybeans down to here. It's hit money management. I got to lock in now a tick of profit and take the risk off the trade and just hope that it could push lower without stopping me out. But that's the trade plan. I want to get to risk-free as aggressively as I can. That's part of the philosophy of the trend jumper, is to get as many risk-free opportunities as possible. And so worst case is I stop out and cover the cost of my commission. You can see I got two positions on here, and I'm just giving it a chance to push down. I need two more ticks lower from the low here, and I'll be at full target. I like my chances. On any other market, I'm going to adjust it above the 12.95 because that is a key level. I just don't do that with soybeans. So I just try to stay consistent, do it the exact same way. Now, if the jump line over here on the right was closer to the market and closer to the price action, I would consider leaving my stop around that jump line and trying to stay in the trade, giving it more room to develop. But it's not. It's way up here. It's Friday. I've had a very successful week. I don't need to take additional risks. I just don't need to. There it is. Look, see? There's my full target. So I got a full winner, and I have a risk-free trade on the trailer. And now it's just a matter of how low will it go. Worst case is I cover the cost of the trade. I got one tick locked in. And at $12.50 a tick, it's actually going to even be a tiny bit profitable. I can buy myself a peanut butter sandwich with that. But if it keeps on going lower, 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 well, I'll be in the trade. I'm going to give the jump line a chance to catch up to the market. And I realize it's come down. I mean, it's come down quite a bit. I could push that stop lower, but then I could also get prematurely stopped out of a larger move. Why would I want to do that? My trade plan keeps producing excellent results. I'm not going to mess with it. I would be foolhardy to start interjecting my personal feelings, my personal needs onto my trade decisions. I do much better just leaning on the system and not having any psychological attachment to the outcome. I lean on the strategy and let it do its thing. And the results speak for themselves. Equity curves keep growing. There's no better way to trade in my view, because once you trade with this kind of style, you take the pressure off of yourself. All the pressure is on the strategy, and it doesn't care. You just have to be the facilitator of the trade plan. That's your job. Be a professional and do your job. That's it. Once I've realized that, my trading turned around. I've been doing a lot of these videos. Hopefully you've seen a bunch of them, and you can see I approach the market the exact same way each and every day. I follow the exact same trade plan. It continues to work. It's a philosophy. It's also based on pure price action. There's always price action in good tradable markets, right? So you want a strategy that takes advantage of the best patterns, the predictable patterns. And the trend jumper is designed to do that. So you combine the trend jumper with a good, strong philosophy, being a professional trader, leaning on the system, having the big picture point of view, because it's the growth in the equity curve that makes you money. It's not whether a trade wins or loses. Okay, that's a tough one for people to finally, hopefully realize. It takes a lot of pain for a lot of people to get to that realization. They're so busy fretting the trade they're in, trying to tinker with the trade, tinker with the outcome. They have no control over the outcome unless they deviate from the trade plan, and then, usually it leads to just screwing it up. Because then what do you do next time? You see, it's a slippery slope. You want to have good habits that you could just have a template that works. It's a business. You just do your business plan. It's like if you have a pizza parlor. You make the pepperoni pizza the exact same way every time. You don't change the menu every time a customer complains or on some whim, right? You don't close your doors because someone gives you a crank call and orders 10 extra large pizzas, and you deliver it and there's no one there. And the driver comes home, he comes back to the restaurant, and you got these 10 pizzas now, cost you money, you don't know what to do with them, right? Do you close your doors? Do you go out of business? No, you keep baking pizzas. You show up the next day at the same time. You close your doors at the same day. You don't whine and complain because no one came into your restaurant today. It was a slow day. Tomorrow will be a busy day. You stay in business. Well, it's just like trading. You take the next trade. You follow the trade plan. You facilitate and operate your trade business like any other business. And so you don't worry about whether the pizza fell on the floor. You don't worry about a trade that loses, because the business plan makes money. That's why we trade, to make money. And when you can realize that, you learn to lean on the system, you take the pressure off yourself, and you can make good trade decisions day in and day out. And you don't worry about a session that loses, because 3 sessions later, you'll already be hitting new record profit levels and new equity highs again. That's what it's all about. And we teach this every day in the Trend Jumper, the trade room that we do, and the training and the strategy itself, the philosophy behind the strategy. Remember, a good strategy is only as good as the trader trading it. So it makes a lot of sense to have a real strong philosophy to back up the strategy, so that you understand why we do what we do. What's the reason? It's always a bigger picture reason. The bottom line is we trade to make money. That should be the only reason. If you're not making money, the chances are you're trading for another reason that you don't understand. And you need to look in the mirror and figure it out. Because actions speak louder than words. And if you're not following the plan, if you're not leaning on the strategy, if you don't even have a plan, you're at a big disadvantage. And trading's hard enough as it is. You do not want to be at a disadvantage when you're trading, because that disadvantage will take your money. All right, I realize I'm giving a lecture here, so I'm just going to shut up now, and we shall just manage this trade. I mean, this is really moving lower. Look, my stop's way up here. It's way down here. Can I take advantage of the gifts from the trader gods? Yeah, I could. I could move my stop down and trail the faster line right up in here. But if I blow this chart up, I got this pink line in sight. I want it to come down to here. And so I'm going to hang on and give it a chance. I got my stop way up here, but the jump line is not yet caught up with the price action. I'm just going to be patient. This could be the mother of a really large move. You just never know. So whoever missed the YM, the Dowie mini trade, was able to come back with this trade. Although it was much smaller, it was still a winner. And the YM one and done today. That one went from 96 to 06. Just stopped out with a 1-tick gain on the trailer. And the YM with a winning session. Not as good as the short, but you know, it is what it is. That's the way the cookie crumbled. You can see the Russell didn't make it to the full target. Stopped out with 1 tick. Actually, the pro calculator moved the stop up around the key level. So you might have even taken a 1 or 2 tick loss on that one. Heating oil has moved down. It just hit the stop. Let's see, that one is at 26. And it got as high as 25, so the quarter century number holding the price. So this trade's still going. That's a key level. The calculator knew to keep it above that. Pretty smart, huh? Heating oil will also have a winning session today as a result. The heating oil's got this great risk-reward ratio. So even if you take a quick loss, you get a winner and you quickly overcome the loss because you have such a favorable risk-reward ratio. And you can see the stop move down. It's right in here now, the yellow dot. So even though there's another setup, this trade is still in the yellow trade. So heating oil, just what an amazing market to trade. And the stop moving lower. Look at that break lower. Now, does this look similar to soybeans? See the lines? This is what I'm hoping is going to happen with soybeans here. Just obviously a lot slower. So I'm just waiting for this to break lower. I do have the chance to move my stop. Let's see, 12.94 and a quarter, because I know that's where the stop's going to move to, and I have a little swing high at a quarter. So 12.94 and a half, I think I could safely lock in a tiny bit more. It's going to move to there anyway. 2 more ticks, that's it. Give this trade every single chance I can to break lower. Assets coming off right here on a lot of markets, obviously. Crude oil heading lower, heating oil lower, and that's quite a fall if you look at the 5-minute chart, isn't it? So, you know, maybe getting down to the end here, but not sure about that until we get there. You got a beautiful heating oil trade in progress. One of these days I'm going to come in here and just record the heating oil session because that's such a dynamic market, such a great trading market. Thinner volume, you pay a little more in slippage, but it's only $4.20 a tick. So even if you were to get 4 ticks of slippage, it's still less than 2 ticks of slippage on crude oil. So I'm willing to give up 4 to 6 ticks on heating oil on an average basis when I get triple-digit runs. And that's very common on heating oil. Well, I could expect soybeans to come up and meet the jump line. You're right, it had a pretty good move down without a significant pullback. I could see it wanting to come up to the jump line. I do have my stop 1 tick above, trying to hide it right there. Right, made that 1 tick adjustment. Right above that little swing level. I usually don't adjust on soybeans, but I'm profitable and I want to try to stay in this trade, so I'm willing to do 1 tick for the very reason that we just saw with heating oil. The same price pattern occurring, very similar. The yellow line starting to elbow down, coming down, the price leading the way, meeting the pink line. This is elbowing down here. I got the price coming down with a good chance that it too will come down and hit the pink line and maybe break through it and could be the beginnings of a much larger move. It happens quite often. You can see on heating oil the pullbacks that occurred up into the jump line. And so I'm expecting that here with soybeans as well. I mean, if I'm lucky, it'll just crash lower, but, you know, nothing's ever that easy. But I don't care. That's the point. Leaning on the strategy, so I got nothing to do but just let it do its thing. I have no control over it. I just got to facilitate the plan. That's what I can control. So as long as I do that, then I'm doing my job. I'm being the best trader I can be. And that's what you have to be to succeed. You have to be the best trader you can be. All right, so the stop will move down to 1294 even, I believe. How much range do I have in this bar? I still need one more tick. No, it may not. I'm going to let this play out. Might have to move that stop quickly. If I have to, I will. Go to 1294. Yeah, I'll definitely push it down 2 ticks if it does move down. Sometimes soybeans is really fast. You know, we get finished in a minute, 2 minutes. This trade's taking longer. Well, you saw how fast it crashed down to its target. So this trade got in at 8:39, hit the target 2 minutes later, basically. And now it's taken its time to progress, so it is what it is. All right, pushing lower, it moved all the way down to 1294. That's what I wanted to see. I'm able to start locking in, and if it pushes even lower, I can anticipate where the stop will end up. It'll be at 1293 and a quarter. Just want to see it push lower because I don't want to see it come up. I suspect, you know what? I think I can get it to 1293 and a quarter now, because even if it comes up hard and closes, the stop's going to move down to 1293 and a quarter. I'm going to do that. See, with range bars, you can anticipate where the stop's going to go. So I'll preempt it in case it moves fast. 1293 and a quarter. That's where I'm sitting right now with my stop. And of course, I will edit this video and just edit out all the time of, you know, waiting. That's all trading is sometimes, is waiting. You can see the stop did move down where I said it would. See? And it's starting to pick up momentum. The pink line pulling it. It's got gravity. And this is going to go to 1292 and a half now. I can see that, so I can move my stop now to 1292 and a half. And you see, just by being patient, little by little, staying in that bigger trade. Remember I said I could have taken the gift from the trade gods, worked the faster line, would have stopped out. Now I have a chance for a bigger move. And it could be a much bigger move. Who knows how big this can be? Now I suspect it'll slow down here on the pink line, but if it crashes through, that would be a good sign. It's been in dive bomb mode on the 5-minute chart. Got some of the John Carter indicators here, the squeeze and the wave, and you know, those are interesting to me, and I like looking at them. You know, they're interesting. They seem to lag the markets, but if you know how to use them, I guess, you know, you can be successful. But with Trend Jumper, I just follow the dots. I mean, I don't need anything else. Whether it's in a squeeze or not or whatever, I'm just going off the pure price action in real time, right when it's happening. And you can see that the stop moved down to 1292 and a quarter. Where did I put it at? Oh, good. I can move it down another tick. There we go. I still have a lot of space between my stop and my price. I mean, I am risking, you know, a good chunk of change here. It's only one contract that's left, so it's no big deal. But, you know, usually I find that when it's time to stop out on a good size move, the stop ends up working its way closer and closer and closer right before the end of the move. Unless it just, you know, turns on a dime and jumps up with energy. And it could bounce off this pink line here. You can see it's struggling to get through it, but it's trying to. There's a crack in the floor already. I like the fact that the yellow line is elbowing lower and starting to angle down steeper. Look at the heating oil trade still going. Notice that on this trade it also stuck on the pink line. It broke through, got pulled back to it. It's got gravitational force. It just does. That's why we use these lines. We know what to expect. And I could see that my stop will move to 1292 even. See the jump line? It's at 1291 and a half. 2 ticks above that is 1292. It's going to move at least to there. Can I move my stop now? Yeah. I could preempt it in case it moves against me fast. So let's lock in another tick. Yeah, I know there's a lot of traders out there that are probably laughing at me. You know, who is this guy? He's only trading 2 contracts. You know, what a wimp, whatever. You know what? I'm following my trade plan. I'll hit certain goals, and when I do, I'll increase my position size. I always start that way with every market I trade. I want that market to produce, build a nice cushion, and then based on my personal trade plan, I will start leveraging up position size. But I always set milestones. I always want to hit profit goals. I call it the earning the right of passage. And I have that concept. Again, it's all about philosophy. I have that built into my trade plan, my bigger picture business plan on how I manage and progress my trading business as I go forward. So I start a specific market and trade plan, and I let it do its thing, and when it hits a certain profit level, that tells me what to do next. I've already figured out what that will be. It triggers the next progression of my trade plan. When do I get to put on more position size? When do I get to increase my position size? When do I get to add another market? With this one here, I'm going to end up adding a third position and a bigger target. So right now, it's only a 1-to-1 risk-reward ratio, which is not my favorite. But it wins so often, I put up with that. But the next progression with this trade plan is going to be to have a target that's down here with a third position. And that's going to take care of the risk-reward ratio, especially with the big trailers that often occur. So I'll hit a certain level, you know, certain milestone, certain profit point, and then I'll put in that third position. That's the next step for me with this trade plan. But you see, it's all methodical. I like incubating small positions so that I can grow them into something significant using the profits that the trade plan makes. See, it's sensible. And then I protect my original capital and grow it. The water level rises and all boats get lifted, you see. That's the philosophy that I use when I trade with all the different markets I trade. Stop just moved down to 1291 and a half. It's a good sign. I expect it's going to hang up on that pink line. Heating oil finally finished. There it is. Heating oil finished. This one trade made up for 1 or 2 or 3 losses that may have occurred earlier. I think it were 2. And another positive session on heating oil. Have to hire a parrot and teach it how to say another positive session on heating oil. Because that is all heating oil does, is win, win, win. But it's the same trade plan. I mean, the trend jumper is the same trade plan on heating oil, soybeans, crude oil, Dow E-mini, Forex. It's the same. Stocks, options. All right, the stop's going to move again. It's going to go to 1290 and 3/4. And I'm going to go ahead and push it down now in case it bounces. At this point, I want to get as much as I can out of this trade. 1290 and 3/4. Right? Because it's at 1290 and 1/4. Now, if it pushes up high, the jump line, maybe it'll move up a little, 1 tick. I don't think it will, actually. I think we're good. 1290 and 3/4 is fine at this point. All right, I was right. See how the stop moved exactly where I said it would? And I got my stop in place. Hopefully it'll hang in there. This may be all she wrote. Now that it's hit the jump line, I want that pink line to pull the price back down. Jump line pushing down on the pink line. The price is sandwiched between those 2 levels. That jump line is a real great line in the sand. Shows you buyers on one side, sellers on the other, where the power is, depending on where the price is, right? Look at that. You see it? See it working the way it does? That's a magic indicator. That pink line was a bigger line in the sand. Well, there's more than one. Who's going to win this battle? Anyone could put lines on a chart, right? what do the lines do for you? These lines are very, very revealing. It's the reason the trend jumper works so well. And that's all she wrote. So it did push through, but a nice trade. Look, I got 6 points. 6.25 points at $50 a point, just like the S&P, right? I think this is a lot easier to trade than the S&P. Am I going to be able to scale up and trade the volume? No. I get to make enough, though. All right, another winning session on soybeans. Soybeans has done nothing but win, win, win ever since I started putting this trade plan together. Still a work in progress, really. Like I said, I want to get that third position on there, which I will. That's part of the plan. I'll earn that right of passage when I hit a certain profit point that I've predetermined in my trade plan. But when I scroll down and look at all the trades in soybeans, which I started forward testing this back on September 9th, right? Here we are on October 17th, 18th, and there have been only like only three losing sessions since September 9th. That's it. That's pretty robust. It gives me the confidence to continue building this trade plan up. All right, everybody, thank you for joining me on my live soybean trades today with the PTU Trend Jumper. If you'd like more information, you could visit the blog, www.ptutrendjumper.com. Thanks for joining me. Have a great weekend, everybody. I'll see you next time.